The US dollar is experiencing its sharpest decline since the 2008 financial crisis. In just 1 week, the dollar index, DXY, has plunged from 108 to 103, a dramatic drop that has sent shockwaves through global markets. Confidence in the American economy is fading fast, and for the first time in years, investors are questioning the dollar's safe haven status. In times of uncertainty, markets typically turn to the US dollar for stability. But this time the reaction has been anything but typical. Several key factors are accelerating the dollar's decline, and they're creating a perfect storm for continued volatility. First, the administration's aggressive trade policies are rattling global confidence. New tariffs on major partners like Canada and Mexico have raised fears of retaliation, which could reduce international demand for US dollars. The threat of a broader trade war now looms large, casting a shadow over the dollar's long-term stability. Trump's tax cuts, once hailed as a cornerstone of his economic agenda, are expected to reduce government revenue by a staggering $5 trillion over the next 10 years. While intended to stimulate growth and boost investor confidence, those cuts may not be sufficient to shield the U.S. economy from the broader and more complex fallout of his aggressive trade policies. At the center of the storm is the impact of tariffs, which have already begun to strain both businesses and consumers. The cost of imported goods has risen, squeezing household budgets and disrupting supply chains. Despite assurances from the administration that these trade battles would ultimately secure better deals for the U.S., the financial weight of these policies is increasingly falling on American consumers. Now the nation finds itself at a critical crossroads. Major financial institutions, J.P. Morgan, Goldman Sachs, and others, are sounding the alarm, predicting a rising probability of a recession within the next 12 months. Though not yet inevitable, the threat is growing. Avoiding a severe downturn will demand not only perfect execution of fiscal strategy, but also a radical rethink of trade policy direction. Compounding the challenge is the growing resistance from global trading partners. Key economic powers are unlikely to bend to U.S. demands without significant pushback. Tensions with China, the EU, and other allies are adding to global instability, and the ripple effects are already visible in foreign exchange volatility, weakened investor sentiment, and stagnating cross-border investment. With financial markets on edge and global supply chains under stress, confidence in the administration's economic leadership is being tested. If the U.S. fails to restore clarity and stability, the country could face a prolonged period of uncertainty. The stakes are enormous, not just for Washington but for the global economy. At the same time, a parallel crisis is unfolding in the corporate world, and one of the most iconic names in American innovation is at its center. Tesla, once the golden child of the electric vehicle revolution, is facing an intensifying backlash across Europe. And at the heart of the controversy is Elon Musk. Throughout 2024 and into 2025, Musk's increasingly erratic behavior, marked by inflammatory political commentary, unpredictable corporate decisions, and a combative public persona, has drawn scrutiny and condemnation. But it was a bold move by a major European investor that brought the crisis to a head. In early 2025, AkademikerPension, one of Denmark's largest pension funds, announced it would completely divest from Tesla and add the company to its exclusion list. The fund cited serious concerns about Tesla's corporate governance, labor practices, and Musk's public conduct. CEO Jens Holst described Musk's actions as not merely reckless, but destructive to the company's long-term viability. AkademikerPension's move sent shockwaves through the financial world. But it didn't stand alone for long. Soon after, Pension Denmark, another heavyweight investor, followed suit, selling off 400 million kroner in Tesla stock. The catalyst: Tesla's refusal to sign a collective bargaining agreement in Sweden, a decision that ignited widespread labor unrest. Strikes began in Tesla service centers across Sweden, gradually crippling operations. Vehicles stopped being delivered. Charging stations went offline. Even the issuance of license plates for Tesla cars came to a halt. What began as a localized dispute quickly escalated into a regional labor revolt, spreading across Scandinavia. In Denmark and Norway, unions rallied in solidarity with their Swedish counterparts. The possibility of blocking Tesla shipments became very real. Still, Tesla remained unyielding. The company's refusal to engage with labor leaders only intensified the backlash. By December 2023, Tesla's operations in Sweden were on the verge of collapse. Pension Denmark responded decisively, adding Tesla to its exclusion list. This wasn't simply about financial losses. Labor representatives on the fund's board made their position clear. Tesla's stance on labor rights, coupled with its CEO's increasingly controversial behavior, posed a material risk to the company's future. Tesla, once viewed as a pioneer and visionary force in clean transportation, now finds itself entangled in a web of regulatory, reputational, and operational crises. European sentiment is shifting. What was once admiration is now wariness, and in some circles, open hostility. The company's unwillingness to adapt, engage in collective bargaining, or rein in its CEO's divisive presence may jeopardize its foothold in one of its most important global markets. In the broader picture, Tesla's troubles mirror a larger theme: a growing global resistance to corporate overreach, a demand for ethical governance, and a refusal to separate innovation from accountability. As the world watches both Washington and Silicon Valley navigate turbulent waters, the message is clear. Leadership without responsibility is no longer enough. Adding to the pressure is surging inflation, with expectations reaching 4.9%, the highest level since late 2020. That's straining consumer spending and putting even more pressure on markets. Meanwhile, the Federal Reserve's Atlanta branch projects a 2.4% contraction in GDP for the first quarter, fueling fears of an imminent recession. While the U.S. stumbles, other economies are gaining momentum. European stock markets are climbing, boosted by stimulus programs and increased defense spending. In China, government-driven domestic consumption is powering economic growth. Capital is flowing out of the U.S. and into foreign markets, further weakening the dollar. Gold, the go-to hedge in times of monetary uncertainty, has now surpassed $3,000 per ounce, a clear signal that investors are fleeing the dollar. Treasury yields are sinking, and expectations of multiple rate cuts from the Fed have investors reassessing their portfolios and moving money overseas. Despite official assurances of a strong dollar policy, institutions like Morgan Stanley are slashing their forecasts. They cite slowing U.S. growth and intensifying global competition as reasons to expect more weakness ahead. Ironically, the very policies intended to boost American industry, like tariffs and protectionist trade measures, are now working against the economy. Tariffs on Chinese goods are a major pressure point. These costs hit U.S. importers, Chinese exporters, and, most directly, American consumers. Chinese suppliers can't fully absorb the impact, and with ongoing supply chain issues, finding domestic alternatives is nearly impossible. Retailers like Walmart are passing the added costs down the line, making life even harder for consumers already squeezed by rising prices. All of this is deepening the economic strain and confirming fears that a prolonged downturn may be unfolding. The U.S. is also facing global pushback. The European Union is preparing $26 billion in counter-tariffs in response to $28 billion in new U.S. levies. American companies are bracing for revenue losses, and the broader market sentiment is quickly deteriorating. With domestic confidence slipping and inflation still climbing, the administration's economic strategy is facing growing scrutiny. Attempts to frame the dollar's fall as a market correction haven't reassured investors. In fact, there's increasing speculation that a recession could be engineered, or at least accepted, as a means to reset the economy. As the deficit expands and import dependency grows, U.S. trade policy is increasingly under the microscope. The weakening dollar is no longer just a market trend. It's becoming a broader symbol of instability. And unless conditions shift, this could be the beginning of a much deeper financial reckoning. A major shift is unfolding across Europe. Once the poster child for clean energy and tech innovation, Tesla is now being rejected by the very institutions and consumers that once embraced it. And this isn't just a financial hit, it's a full-blown identity crisis. In January 2025, the warning signs became undeniable. Tesla's European sales crashed by 45%, while competitors surged ahead with a 37% increase. Tesla's grip on the market is slipping fast, especially in corporate fleets where demand is now flat or falling. At the same time, the EV landscape in Europe has exploded. Dozens of new models from European and Chinese automakers have flooded the market, leaving Tesla's dated lineup looking increasingly out of step. But this isn't just about losing ground in a competitive market. It's about a brand in freefall. A survey from January showed that 59% of Britons, both current and potential EV owners, would no longer consider buying a Tesla. The reason? Elon Musk. Once seen as a pioneer of green tech, Musk has become a lightning rod for controversy. His political alliances and public statements have alienated large swaths of the European public. On social media, hashtags like #TeslaTakedown and #swastikars are trending, reflecting widespread anger over Musk's increasingly extreme views. One longtime Tesla driver in the UK summed it up after trading in his car. "I love the tech, but I can't stand what Musk represents anymore." This story is repeating itself all over Europe. Tesla drivers who were once praised for making smart, sustainable choices now report being mocked, criticized, or even harassed. A brand that was once admired is now polarizing, and Musk is at the center of it. His support for far-right movements and figures across Europe has sparked outrage. In Germany, His live-streamed interview with AfD leader Alice Weidel, a party currently under investigation for extremism, was seen as a dangerous endorsement. In the UK, he sparred with Prime Minister Rishi Sunak while promoting the right-wing Reform UK party. In Italy, he's cozied up to nationalist leader Giorgia Meloni. Each new political move distances Musk from his original image as an innovative, forward-thinking tech visionary. And it doesn't stop there. Musk's recent dismissive remarks about climate change have shocked many of Tesla's original supporters. He's begun questioning climate science, ridiculing environmental regulations, and even backing known climate deniers. His financial support for Donald Trump's political return has only amplified concerns. In February 2025, European regulators began investigating X, formerly Twitter, over fears that Musk's hands-off approach is enabling extremist content and disinformation to thrive. With his platform influencing public opinion and possibly elections, authorities are exploring sanctions to rein him in. But this goes beyond Musk. Tensions between the US and Europe are heating up, stoked by Trump's aggressive foreign policy and renewed interest in projects like Greenland acquisition. European leaders are making it clear, any attempt to undermine their values, whether through politics or tech, will be met with strong resistance. And Tesla? It's caught in the crossfire. The company's crisis is more than just a decline in sales. It's part of a broader clash over values: environmental protection, democratic integrity, and national sovereignty. Musk, once a symbol of progress, is now seen by many in Europe as a threat to those very principles. Tesla's fall from grace isn't just about Elon Musk, but his actions have undeniably cast a long, dark shadow over the company's future. What do you think? Is Tesla's brand collapse in Europe justified, or is it a sign of deeper global tensions? Drop your thoughts below, and as always, stay informed. Stay curious. See you next time.